All right, what up? It's Ruben from TGE, and in today's video, I want to give you my checklist that I go over before I get into a trade, before I execute, okay? And also when I'm exiting trades, so you could do the same thing too, okay? And I want to show you, before I show you that checklist, I want you to understand why this is important, okay? Today, this is the same reason, okay? I just want to let you know in advance that my trading strategy has not a significant win rate. It's about, I think 50% win rate is pretty darn good, okay? Sometimes it's even 40%. But here's the thing about our strategy, at least the one that we use inside my Telegram group, the risk versus reward. That's what matters, okay? When we have a good risk versus reward ratio, you can have a series of losers, but that one trade that takes off or two trades in a row that take off can really make up the losses and more. And that's why we come out profitable by the end of the month. Sometimes not always the month, but by the end of the year for sure. Okay, that's the main objective. Now, how do we do this? I'm going to show you with ACHR and with SMCI. Okay, I'm going to go over these trades that are happening right now. Okay, and I'm actually, if you see me looking around the screen, it's because I got those trades going on right now and I got to pay attention to them. But let's go over the wins before I show you the checklist so you can do the same thing too. All right, so today, and I posted these trades about a few days ago. So if you saw the video and you caught this move, awesome. Okay, so another great win. Asian made an awesome win today, 50% on ACHR, and he got out. So he took his money. We got 65% gain on the August calls. I'm still holding on to the October calls. I may be selling that as we speak right now in case it decides to fall down, but it looks pretty good to go for our main target, which I'll talk about in this video, which is the 1232 area. Okay. Tesla was something that was doing really well. I talked about this 4 days ago that it was setting up for an explosive move, and my trade got invalidated today. So it was as high as 35%, but we closed the calls at 7%. So it wasn't a red trade and it wasn't break even. We made money. And the shares, they were up close to 3%, but we sold at 1.63%. 320 is just a major resistance level, which is, I'll show you how I use this, how we use it inside my group to figure out what the biggest key levels are, what can be a blocker from getting into our profit targets, into our price target. So this way you can do the same, okay? So I will still be looking at it. Pretty good so far. Rodney shared his win today. He said, been with Ruben for a week and have already had 3 winners. Man, the 3 winners. Tesla, Archer, Sound. He helped me in managing the spread, and I had to Google it for a nice win. Thanks, Ruben. Awesome. So, truly, we've been just banking on this stuff, and we've been swing trading a little bit more often because we like swing trading. We have a life. We don't want to live by the charts all day long. Okay, let's go over the checklist so you could do the same thing, okay? Here we go. So, check item list number 1. This is a common question that I get all the time. It's like, how do I pick the liquid tickers? How do I pick the right tickers? Look, you want to pick tickers that are liquid and have high IV, okay? Implied volatility. Why is this important? Because focusing on tickers that are liquid, one, they get your fills in faster and cleaner, okay? And if you have something with high IV, you can ensure that the price is going to move. Implied volatility is just like an anticipation. When there's a lot of high IV on a ticker, it moves a lot of dollars on a single day, and you want that. Go in and out as quickly as you possibly can. Know your targets and try to go from out of the money to into the money as soon as possible. Now, a lot of traders that I talk to don't know how to do this. So here's what I'm going to do for you. I'm going to share with you my watch list. Okay. I will put it in the description box. This is a watch list that I have had and I've maintained for a long time. I'm sure some of them don't even exist anymore, but these are all the tickers that I have traded in the last 5 to 6 years. Okay. They're all solid tickers. Not all year round, but the majority of them, they're going to move very nicely, okay? And you could pick them. Okay, for sure, you can't go wrong with the mega caps. You can't go wrong with semiconductors. You cannot go wrong with indices or ETFs. Like these are solid tickers in the sectors, of course. They're all liquid. Some of them have higher IV than others, like Tesla, right? Just pick solid ones. I'm gonna put this for you to use in the link, and you can save it to your TradingView if you use that. If you don't use TradingView, get TradingView as free, and you can use that. Okay. So that's setup item number one, right? Just check the list here. I gotta look at Archer here because it may be coming down. All right. Number two, check volume. Okay. Check volume on the ticker. Check volume. Why is this important? Okay. This confirms that your contracts, the contracts that you're going to be picking, have a sufficient amount of daily volume and open interest. Again, it goes back to liquid tickers. You want option contracts that have tight spreads, right? It makes going in and out of contracts extremely easy. If you pick tickers that have very high spreads on the option contract, okay, let me show you an example here. Let's see if we could pull up the chart here for this. Actually, let me pull up the chart for this. Oops. Let me take a look at Tesla here. Okay, this is a contract for Tesla right here. Okay, this is a contract for Tesla. You can see here, like the spread, it's not the greatest. It's like 10 cents apart. That's the maximum that I would ever do. The tighter the spread, the easier. When you go to SPY, they're like a penny apart. Okay, that's even better. That shows you that there's a lot of liquidity on that ticker. Okay, check the volume. Make sure that the spreads are tight. Make sure that there's a lot of volume and open interest. You can see it right here too. Like this is the volume chart, lots of volume. This is the open interest, lots of open interest. Pick tickers that are liquid. Okay, check the volume. Okay. Next thing that you want to check is the Gacktron levels. This is just, now I may be biased because it's my tool. I built the tool, but it does the job so well. And I'm going to show you this example here with what it looks like and how I'm using it here with SMCI and Archer. Okay. This is my tool right here called Gacktron. It's a lot. If this is going to give you a seizure, sorry about that. But what this does is that it identifies the biggest key support and resistance levels, okay? And it also marks price targets per expiration date, okay? So this gives you an idea of what the range is. You're not guessing of like, I think this can go here or I think it may go there. It's just numbers, right? Just let Gacktron grab all the option data and just do it for you, okay? You don't even have to put any work into it. That's how easy it is. Now, with that said, what I do with these levels is that I mark them here on my trading view, okay? You can see here, I here marked the AOI, these purple lines, AOI, MR means max reward, like the biggest resistance level, P-trans. This Archer stock was pretty much here above $10 P-trans. That in Gacktron terms means that we are in a positive transition from negative to bullish sentiment. Okay, and then we mark our resistance zones that we got from from Gacktron here. And I was telling the group inside Telegram, as long as we're above P-trans, these calls are good. There is momentum to the upside. Now, for a while, $10.50 and $11 strikes were the biggest resistance areas. That has shifted. Gacktron is now telling us that's no longer the case. We're broke above it. The next level is $12. You can see it right here. But $11 is still a level of resistance. As of right now, $11 may be the next support zone. Okay, so this keeps Gacktron is constantly updating throughout the day. It's not yesterday's news. It's not last week's data. It's today's, right now. What's being executed? All this data that you see on the left-hand side on the right hand side. These are real orders happening right now. That's why Gextron is, I'm just biased. I think it's awesome. Let me show you SMCI. Okay, SMCI is a trade that we're in. It's up 8% on the day right now. Okay, look at it, 8% on the day. We are in leaps for this. We are up almost $200 per contract. We caught this initial move here on the upside days ago, and it hit close to 50, and we took our money because I said this is the max reward. This may see a small rejection. We took our money, okay, and then now we got back in. We try to get back in. We said, okay, as long as it stays above P trans, as long as it's, we have max reward here that can be the biggest resistance zone, but we hopped over it. So now it's updating us. It updates it. We broke above it. Now the next level of resistance is 55, and we're going to be going to 55 there. Our target is 61.96. That's why we chose SMCI, okay? Which goes into checklist item number 4. Or what is it? Number 4. Okay? Check risk versus reward. Super important, okay? Anytime we're looking in, at least that I'm looking into a trade to swing, I'm looking at the risk versus reward. Like I said, our win rate is fairly low. We get in and out of contracts and shares so frequently, you know, and it's based off of the risk versus reward. As long as this, our strategy is keep the risk low, minimum, like you see right here. We're willing to risk 74 cents on SMCI to go all the way to $61. Okay, and you can see here the risk versus reward is about 17.18. That's a solid risk versus reward. That is how we win. So yes, we can have a lot of losers trades, but they're like 5% losers. Okay, who cares, right? When we're aiming for a 25% move on a stock, that's a solid win rate. That's a solid risk versus reward ratio. That's what you want. Okay, pick a strategy that gives every trade the highest opportunity, the biggest opportunity to go make a lot of money, right? And a strategy that mitigates your losses. Okay, that is how you do it. Okay, hint, hint, hint. Okay, number 4. Next thing I do, which again leads to the next thing. If you have a good risk versus reward ratio, if you cannot do number 5 correctly, it does not matter what you have. You will never be profitable. Never. I've seen it time and time again. Check your net lick, or is that what I want to say? Maybe sizing. Yeah, check your net liquid value for sizing. Okay. Everything about this strategy, the only reason we're able to maintain this profitable year-to-date performance is because we have in check our positioning based on our value. Okay. I hate to say it, but for those who have small accounts, if you are oversizing, I don't care what account size you have. You can have $1,000, you can have $100,000, you can have $1 million. I've seen people have a $300,000 account and they blow it in a month, and then they're stuck and they're crying and they're scarred for life. That sucks. Okay, don't do that. And the only reason I'm able to have a low win rate, well, what's considered a low win rate, I guess in social media standards, and a good risk versus reward is because I'm always sizing in correctly. I have a whole video on how to size correctly, especially if you have a 6-figure account. Before you even trade, make sure that you size in correctly. Watch that video, okay? Because it's all about taking as many opportunities like this, number 4, but you can only do that if you can size in correctly based on your account, okay? So that's number 5. Number 6, all right, let's take a look at the last one here because I wrote notes on this. Number 6 is keep an eye. I'm always checking on the ETFs, I'm always checking SPY, QQQ, IWM. When I'm trading, when I'm in a trade, I'm always keeping an eye on the indices here. Let me go back to this watch list. How is SPY doing? How is QQQ doing? These SPY represents the overall market. QQQ represents tech. Tech has a big influence in the market. Okay. If tech is falling drastically, that can definitely affect my SMCI trade, right? Um, so I'm always keeping an eye out on the ETFs. Always keep an eye out. Okay. See what they're doing and see if the ticker that you want to trade has relative strength, if it can be independent from the entire market. Okay. Oh wow, 15 minutes. That's it. That's my checklist. Okay. I hope this is something that I do every single day in and day out. This is why I'm able to have a profitable year. Okay. That's why we're able to catch these type of moves. Okay. Archer, SMCI. That's why I'm able to do this stuff. Here's the checklist. Copy it, use it, practice it, and I will see you in the next video.